Good morning, everybody. Happy Monday. Welcome back to the Daily Profit Plan. Let's get started. Just after 9 o'clock, 12:29. Happy birthday to one of my best friends. I think I could probably send a message right now. Um, Happy Monday, everybody. Another holiday disrupted week. We have New Year's Eve, New Year's Day. Markets will be open New Year's Eve, close New Year's Day. We're going to do sessions. Let's see, schedule wise, I think today, tomorrow. Today, tomorrow, we'll be off Wednesday, Thursday, back on Friday to wrap up the week. I'm going to get some videos posted for Telegram and my socials, pump out a couple videos on TradingView, kind of where we are for the end of the year. Volatility is coming back a tiny bit. I thought a little bit about how to play long vol. It's just expensive, but we technically poked the lowest volatility of the year last week, and that would have been just below the 14 handle. So we had a low last week around 1338. I mean, I think the reality is, if you want to go long vol, buying a call option for $6, $7, $8 was kind of an at the money, or even up to like a 70 delta. It's expensive, but if we have a volatility based event where we go from, I mean, a 12, 13 delta, I guess the only issue I have is you got to time the VIX, right? Um, I know right now the VIX contracts will go out to September of 2026. I mean, you'd think that it's plenty of time to get some type of VIX event, right? I mean, I don't think we're going to go 9 months with no movement. Let me share the screen. I'm sharing the screen, right? Yeah. Okay. Let me get the chat up here. Um, we're likely to see movement, but I had a lot of just content in the last few days, trade ideas, just kind of thoughts on where the market can go. I mean, look, I'll just level with you. I think this market is going to have um, a lot of potential one way or the other. I mean, literally, I've heard tail risks of up to 30 to 40% to the downside, which would obviously be very challenging. But at the same time, you know, somebody even I was looking at a macro analyst that was talking about being in a Goldilocks period that they're projecting like an 8,000 plus S&P, and I'm like, that is aggressive, man. Like, and not even like by the end of the year. It's like in the first half of 2020. And like that's blowing off the top. If we're going to 8,000, if we're going to 8,000 SPX, which I'm not saying this is happening, right? But let's just think about percentages. Let's go to 8,000. Okay, if we go to 8,000, we blow this top off. You mean to tell me this market's going to find a way to hit 15% in the first half of the year without some crazy unsavory move? I don't know. I mean, what we tend to see for some of these like long sustained up moves is a correction first. So this is why I keep going back to the analysis we've been kind of wading through the last couple of months, which is once we established highs around 69, we're at 69.29. We're going to gap open a little bit lower today. I mean, we might still see the market buying the dip. We'll keep an eye on our alignments here. There's still the 21 and 50 period moving average that are keeping this market up. Okay. Everything stacks up pretty bullish for right now. But major levels, I would say, still going back to the October 10th candle, November 20th candle. The market could work its way down here. This could also offer some intermediate support. That was that little slide into December before we started to rally late in the month or mid-month, really. But if we, get to 7,000, break 7,000, okay, fine. Right? The year isn't over, so we have just a couple more days to get into that. The official Santa rally technically is through New Year's Day, even though the market is closed. Are we going to see here? Are we going to see? Let's go get us some gamma levels. Okay, so pretty wide today. 69.10 as long as we're above that, up to 69.55. That's my largest gamma level on the day. Are we going to gap open, stay above, these positive gamma levels, which right now this pivot is around 69.10. As long as we see a decent price action move to the upside, getting up to 69.55, that's a pretty big move. Obviously, if we're starting around 30, gapping a little bit lower, the gap is not small today. We're talking actually gapping into negative gamma territory by about 0.4%. So that's not a nothing burger when it comes to um, a drop in the markets. Anything on Y hits record high, post election day runs, hovers. Gold and silver's been down from what I saw, like 2% this morning. Looks like there's some exhaustion gaps happening on gold and silver. So SPY opening about 0.4% lower. Keep an eye on the VIX today. We could have a decent VIX run after hitting, lows for the year. We could see some interesting price action on the VIX. Again, this is a week where it is pretty low volume, right? I wouldn't be surprised if we watch prices go beyond the expected move. So just be cautious of that. It may be a week that I don't feel like forcing trades. On a daily profit play, when we want things to be contained, it's probably safe for me to look at a kind of a top and bottom trade as opposed to I need price to stay in this range, right? Even last week, I know we didn't trade on Wednesday, Thursday last week, but we've had like 5 of 8 days or 5 of 9 days that have been outside the plus or minus expected move, the implied move for the day. So today, SPX with a gap lower, we're going to deal with some elevated VIX right away. Now, we could gap lower and we could see something like this happen. Let me go SPX here. So let's say that we gap lower. I was looking at like a 0.4% move on SPY. So let's look at 0.4%. So there's our close, 0.4%. So that takes me down to, let's say, 6,900, right? Could we go lower? Sure. Are we in negative gamma? Yes. But here is where I would say the market would kind of show resiliency. If we gap lower, start to work our way back up above 69.10, looking to stay in a positive gamma for the day and possibly try to fill the gap or try to do that for the day or the week. So if we gap lower, do we fill this gap by the end of the week? I don't think that's a terrible trade. So, I mean, could we get back to some fresh highs? 69.55 is still a large gamma level. This is a 0 DT, but let me check some levels. Let's go here. Let's go to, so the 31st markets are closed. Are they, or no, I'm sorry, are they open? When's the 31st? That's Thursday, Wednesday. Oh, okay. So we have an expiration on the 31st. That's Wednesday. First, the markets are closed. Second, let's look at some gamma on Friday the 2nd. So right now, let's go Friday. All right. Again, a lot of this it's just big strikes to the upside. 69.50, which still hasn't been touched. That's a pretty large gamma level. 7,000, massive gamma level. And then this would be Monday, 7th. I mean, to me, it's like all signs point to trying to get this market back up to some fresh highs. So how does this deteriorate and all of a sudden these big gamma flows at 7,000 start to look way less significant? Well, if the market gaps lower today and pushes lower, okay. But still, what I see is a lot of positive gamma. I would say resistance. This doesn't mean that it just assuming that price is going to hit these levels. This is showing us that flows tend to try to get there. And if there's not a bunch of sticky levels down here, which you can see these are much smaller. So 69.20, it's like we're going to gap lower to like 6,900. Okay. 69.10 is a critical spot because if we get back into positive gamma, then we're revisiting this whole story back to 69.25, 69.50. There's a pretty significant pin around 7,000. So by this Friday, or next week, Monday, I could see prices above or trying to get to 69.50 and 7,000. So I actually don't mind looking at a trade this week, trying to get filled on something like well, my new service is going to be like Income Edge or whatever we're going to call it, but kind of it sets up for a pretty good trade idea for the week. It's pretty low risk. Um, See if it sets up to kind of be square for the week or even get back into a gap fill from today's drop lower. Okay. It's gold and silver price movement. A lot of the indexes, or is it untethered? I mean, there's not a it's not a massive correlation. I mean, gold and silver have just been running on their own little island, which has been this whole narrative of there's a couple takes here, right? I like gold and silver, and I like them long term. I think that you have to be prepared for some pretty significant volatility in gold and silver. Like when I'm talking volatility, I mean pullbacks of probably 15 to 50%. That's not an exaggeration. I think people that have never traded gold and silver before are going to start dipping their toes into gold and silver, and they will be throttled by the amount of volatility. Um, I do think the retail crowd is a little crazy, where you will see some aggressive dip buying. It's like this is a huge candle, right? And I have technically been throwing out this light warning of, look, I want to buy the dips on silver. I want to buy the dips on gold. But I've been throwing out this warning that we have not tested a 200-day moving average in like 540 bars. And the longest stretch we've seen historically was a run of 600 bars back in 2009 to 2011. Okay. So I don't think gold has tons and tons of upside without having a significant correction. So this is the start of it. Let's say that this candle, we put in a huge sell-off candle here that had some follow through. So if we do something similar where we put in a huge candle here and we have some follow through, then we look to see what type of, if there is a topping pattern, what does it look like? Um, I mean, I guess if traders are lucky, it looks something like this, where it's not going to be like the candle's the top, but it's a sell-off day. Everyone comes in, buys the dip, takes it right back up, takes it right back up, and then everyone's going to be jumping in here just wanting to see silver go to 5,000 an ounce. And look, this is a rising wedge. Rising wedges are great corrections. They don't mean anything as far as big reversals, but a correction that gets us back into this area for gold, great spot to be looking to buy. That way you're not calling the top here. You're just going to let price play out. Do I want to short gold? No. But I do think that the upside is a little bit limited until we end up hitting this 200-day moving average, which I think right now we're probably climbing up to like 540 or 550 bars. This goes back to like 2023. I got to go back here. Yeah, October 2023 to current. We're at 567 bars. Okay. So even, I mean, call me crazy, but within the first like 30 to 40 bars of trading this year, we are either making a run towards it now, or we are going to see a topping pattern that gets us there sooner rather than later. I think this is an opportunity to buy a great dip. If we come back to the 144 moving average or the 200 moving average, I really do like, positioning for a, medium to long-term gold trade. Percentage wise, I mean, this is what's going to catch everyone off guard thinking they can just chase gold and silver, because we would be having a correction of something around, 19%. It can overshoot. We could have close to a 20+% correction on gold. Silver doesn't have the same type of extremes, but look at that candle. Unbelievable, man. I had a measure move around 91. This is why I was making a warning. It's like, take some profit if you're still riding. And look, if I was still in silver for the 3-year campaign trade that I built up, I would have been taking profit with a trailing stop loss. And most likely, I mean, it may not have been tagged had I moved the stop loss like, below that low or below that low. But man, isn't that crappy to have like one day you get stopped out? Right. And most likely this one day will come back up and find the halfway point, or maybe even test the highs of the candle. But this is going to be a big shakeout, and we'll probably come back and find some type of support here. We'll have some type of like topping formation. We'll measure it out. Like, I just want to be patient. I think this needs to correct. Technically, this needs to correct. So it's crazy. Everyone that's been buying insurance on their silver, it's super expensive to buy puts on silver. So it is not an easy thing other than just taking profit, selling calls, maybe taking some profit, maybe. Um, anyway, what a crazy candle, huh? This was a drop of 13, almost 14% just today on silver. Woof. That had to be an exhaustion gap in a way. If you go down to a smaller time frame, look at that. So we gapped up and just annihilated that gap with some topping patterns. So crazy stuff. And it's that type of, I mean, that's a single day move. 13, almost 14% in a single day. Um, yeah, I'm sure that buying the dip seems great, but I would not want to be putting, let's say I wanted to allocate, you know, 10 grand to silver. I don't want to put $10,000 on the line right now. I would put probably 2,000, right? And if it goes like high, low, lower, high, lower, low, 2,000. And if it pulls back again, watch this level here, 2,000. Look for a trend line break. And it starts to confirm, add another 2,000. Like use levels, use areas to position for, okay, test level 1 and 2 and 3 if I get it, 4 if I want to add to it. And I could eventually build my way up to a 10K position, right? And I'm not just, I don't know, you don't have to be perfect this way. You give yourself a lot more room for error. You can stomach all sorts of crazy volatility because you're barely invested from what you expected. Um, but it wouldn't surprise me if we get like something. I'll throw like 20% to 50%. I said 15 to 50. It's like I do mean that. I think we could have nasty volatility on gold and silver. I also think that there is, in a way, I do think that governments, probably the U.S. government, probably U.S. government, wants to see some type of lid on gold and silver a little bit. Here's where I would say the market's dealing with some shenanigans. If silver to trade it like silver futures, it it is added margin, meaning I'm not sure what it takes for a silver contract right now, but let's say they double it or they triple it. That is some regulatory bullshit, but it does happen. And when stuff like that happens, that is how we've had these monster corrections in the past, and everyone's left like, oh, that's unfair. That it is unfair. But if that happens, that is bigger forces at play that are suppressing volatility, or I'm sorry, suppressing gains and upside. And the reason why is because if you think about this run in gold and silver, what does this truly mean? This run in gold and silver is fueling this debasement narrative. And everyone thinks like, you know what? I don't want to own US bonds anymore. That whole idea of a 60-40 portfolio, I don't want to have any bond exposure. I'm just going to go strictly to gold and I'll add some gold and silver and that's it. Look, bonds are in the toilet and they have been for the last 4 or 5 years, but they do not come with the type of volatility that traders would see in this type of allocation to gold and silver. If you did, even, I mean, it was coming out the last month, JP Morgan talked about revisiting the 60-40 portfolio, going to like a 60-20-20, having 60 in equities, 20 in bonds, 20 in gold or silver or both, right? Like a mix. Even that type of allocation, these markets aren't huge. So to add that type to this market cap, it's like we'd see prices soar. And in the background, institutions will do it, but they'll make it more challenging for retail traders to do it, especially if they mess with margin. If it's more margin all of a sudden to trade silver, they'll tell you that they're trying to protect you. They'll tell you it's because there's so much volatility, but it's probably just because they want to suppress price action. So anyway, let's see here. Have you heard today, December 29th, will be a huge shorting issue that will raise buying tomorrow? Are you like asking me because you know something, or are you asking me because we're seeing gold and silver down in the day? Look, we are still in a very questionable environment because this is a time where the markets are thin volume, lightly traded, and if there is a chance to short anything, if there's a chance to push anything, this is the perfect time to do it. You'll have massive, massive flows that can move these markets aggressively. And I mean, this is a perfect example. So do I buy this dip? Well, if I'm going to, it's going to be a small chunk. Okay. because having a 14% correction is not nothing, right? But I also wouldn't be surprised if we pull back to, I don't know, $60, 65. So if I want to throw here's what I'm thinking. I mean, honestly, I don't mind throwing in like a $1,000 to $2,000 position, although I have lots of positions down here that are still waiting. Um, I wouldn't mind taking a little bit there, right? Just putting a little position like, oh, it's decent correction, but it could easily double. We could easily have a 20 to 30% sell off. And everyone that's been enjoying this run, especially this last run that has pushed silver up 83% since October. What? You just trim most of that. I mean, maybe you take it all away. So all I'm saying is be careful. Dollar cost average, sure. Choose your level, sure. Just you don't want to go all in thinking like, oh, that's the bottom. That's never going to come back. It's like we could easily pull back. You take a low from 28 to $29 all the way up to 80 something. Um, just look at a fib there, right? We pull back to 30 to 38%. We're talking 67 or 62 on this chart. We pull back and test any previous structure where the market's been wedging like this. That's $55. Those are levels I wouldn't mind buying. So that's what I'll do. I mean, I want to put some more in gold and silver, but those are the levels I want to choose. Okay, do I still have the silver? Yep. It's not a, is it? I thought it was like 2027. We went like way further out than that. That silver trade, I'm pretty sure we went out to like 2027 or 2028. That was a much longer term trade. Silver. Yeah, we're out 753 days in that one. So I'm still up on that trade. I don't know if that was accurate because I paid $1.65. Oh wait, that's accurate because it was up to $1,000 profit. So $1.65 times 3. So my risk is 495. $1.65. My max profit would be 335. So 335 times 3. So I can make $1,000 on that if we stay above $50. And if we see here's what's going to be interesting. We see a dip. Let's say we see a dip like we are today, and in the next 30 days we're back up to all-time highs at $83, $84. That might not be a bad trade just to take off the table. If I'm maxed out at $1,000 and I'm up $500 or $600, that's a lot of time I get back in that trade by taking like 50, 60% of that max profit. Yeah, it's okay. I mean, Jason, if you took 2026, even better. I'm not sure what you paid for that trade for 2026, but even better, right? The probability of coming back to 45 or $50 is pretty slim. I mean, yes, it's SLV. Let's take a look at SLV. So we traded up as high as 71. If we get to $50, I mean, it's you can get a pullback there, but let's see what it is on the option chain as far as you're going to January, what, 16th? Is this what you did? Okay. So look at the deltas, January 16th, and you need prices to stay above $50. I mean, right now that's trading for a 4 delta. So you still have like a 96% chance it stays completely above the $50 strike, which is where you need it to be. So in the next 18 days, I mean, if you're like you said, if you're trading for 490, your max profit is $5, right? If you did a 45 by 50. So your max profit would be $5. You're trading for 490. If I pulled 490 out of a $5 spread, you're up 98% of that max profit. So you can certainly take it. I would happily sacrifice that extra, 10 cents on that trade. Right. So your max profit would be 340. 341. Yeah, good. That's great. Cool. So yep. And look, there's going to be some volatility. Since I'm not looking to force a trade today on SPX, which we are getting some gapping today. There's going to be some drama. End of the year stuff. What do I have? I know I have some waterfall income trades running. Let's go into this week on the 29th. plus or minus 22 points in the day. Did anybody catch a pre-market? I just didn't have the chance to get the plus or minus pre-market, but right now we're trading around 21.5. So plus minus 21.5. Okay. I want to look at with this gap lower today. This trading day would have been open to close on Friday was a big nothing burger. We opened around 34, closed around 30. So a nice flat day there. We are gapping significantly lower. See 60. What was the close? This close would be 69.29. So I'm going to recenter my daily profit indicator. 69.29. Plus minus 27 and 28 on the market. Okay, that's fair. All right, so we'll go up to the higher one at 28. So pre-market 28, live feed 21.50. I mean, I think the market has a chance to still, like, again, if we have a Santa rally, which right now going back a week or so, let's go back to SPX. A Santa rally technically is December 24th through January 1st. I guess I'll go to the daily chart and see where that started. So the 24th is, here's the 19th, 22nd, 23rd, 24th. So if we have a Santa rally, we would want to see prices staying above this level. So we opened, we had a pretty promising 2-day push where it was like 1 day up, 1 day higher. Market breadth did return in a pretty decent way. So let me see. I mean, here's kind of a gutsy play on the day. It's like, are we going to try to get back to positive territory, or this week are we going to get back and fill this gap? I mean, that's not a terrible play. So let me take a look here, going out to Friday the 2nd, or Monday the 5th, 2nd or 5th, 2nd or 5th. Let's go the 5th. Right now, if I did a buy, sell, buy, see where this thing gapped. So we opened today around 69.03. I'm going to see if I can do a pin price. So that pin price would be a 5 wide. That'd be a profit trap, actually. Let me see if I can get this one filled for. So that trade's offering $1.85. I can do one of two things. I can either this is going to be something similar that I do in my Income Edge service starting in January. I either do a credit spread that gets me $2 or $2.50 credit, or I want to do a broken wing butterfly. That's more the advanced stuff, but that's kind of what I like to do, because if I can get this thing pinned right here, see if I can get this thing pinned. So it's trading for $1.70. If I get this filled for $2, I want to take this trade. So could I go a little bit wider here? $1.25 with a 10 wide profit trap. This actually is a pretty darn good trade. I'm taking on a bit more risk, but I do have $1,000 prop. So if we have our break even would be all the way down to like 68.94. So we'd actually have a break even of lower than today's open. Could I lose on the trade? Yes, of course. Let me see if I can get. I mean, I want to put this in at like $1.50 or $2. That'd be a pretty good trade. I get more credit here, closer to like a $2 credit. My break even is still around 69, like 60, 68.99, 68.98. This one I don't mind. That gives me a buck. I'm risking 390 to make $1, but I also have a profit trap in here. Let me just build this out, make sure I'm not overlooking something. Option strat, build. So this would go to the 5th. So January 5th. Okay, if I buy the 15 and I sell the 5 and then buy the 68.90. Yeah, that's a broken wing. I mean, that's a big fat profit trap. All right. I'm going to take this trade, see if I can get this trade in for $1. See if we get it. I want at least $1 out of this trade. I'm going to try to go $1.10. So $1.10 not filling. $1.05 not filling. Let's try to get a buck on this trade. This is a typical daily profit play risk, but structuring it a little bit differently. All right, pending order for a buck. Let's see. All right, just got filled for $1. It's not a bad trade. Okay, this is a bonus trade. You're welcome to take it if you want it. Okay, this is going to go in my general telegram here. This is a bonus trade. So we have live session update, big swings on gold and silver, markets gapping lower. I'm still seeing positive flows in S&P, and we're in the Santa rally window from December 24 to January 1st. So I'm placing a trade, looking to see if we can reclaim fresh highs this week or try to hit 69.50 to 7,000 price levels. So SPX, it's a 1, 2 of 26 expiration. So it's, did I go all right with the 5th? I went to the 5th. So I'm giving this trade a week. And I'm buying the 69.15, 15.05 and 90. So buying the 69.15 put, selling the 69.05 put, and then the 69 or 68.90. Yep. And that was $1 credit filled. So this is $1 credit. Likely profit if SPX is greater than 68.15. A $10 profit trap between 69.05. Well, I guess $10 profit trap at 69.05. But bonus profit down to 68.95. I guess 96 to 69.14. Right. So if I'm at least at 68.96, I make an extra $100. If I'm at 69.14, an extra $100. If it gets closer and closer to 69.05, it's getting better and better and better. So 69.10 would be a $500 profit trap. 69.06 would be a $900 profit trap. Okay. And then my max risk would be $4 max risk below 68.90. So this is what the trade looks like build this out. No, it's a January 5th. I'm going Monday. So I'm going to block this out. So $1 credit. And then I have a $10 pin at 69.05. Risk below 68.90. So if the Santa rally fails, and we're below 68.90, we take on some risk by, anytime this week. But basically, this profit trap gets me all the way down to 68.96, which means I get a little bit of breathing room from today's price open. Okay, nice. Bruce got filled for $1.10, got filled $1.05. Awesome. Just got filled for $1.20. Great. Understand the risk, right? You're taking on a bit more risk on the downside. So you're getting $1, $20, $10, $5. Your max risk is $5, right? So $5 minus your credit is going to be your max risk. So I got $1, which means I'm risking 4 to make 1. However, what is kind of nice about this is coming into the day of expiration. So next Monday, if we're trading inside this profit trap at all, we can see up to $10 of extra profit. So price is up. Let's say price is at 69.50 or price is 69.75. We're just going to keep our dollar credit, right? Or $5 or $10, whatever you want. That's fine. But if we're trading between 69.14 down to 69.10, down to 69.05, even down to 6900, all these strikes are inside that profit trap. Does that make sense? Because from 69.05, where I have my pin price, if we're at 6, 7, 8, 9, 10, 11, 12, 13, 14, that's a profit trap. If we're at 04, 3, 2, 1, 6900, 99, 8, 7, 6, that's a profit trap. And then this is my dollar credit. So my risk is over here for $4. No, they're all puts. They're all puts. I put in Telegram. So that's the trade I just took. 15, 5, and 80, all puts. It's a put fly. It's a broken wing or skip strike because I went from a 10 wide profit trap to a 15 wide credit spread. So that's what allowed me to finance this trade and get it in as a credit, but also build in that profit trap. They're all puts. And it's SPX is cash settled. It doesn't matter whether you do calls or puts, but I'm doing puts because that'd be my kind of trap to the downside. Okay. All right. Move this out of the way. Does this make sense how I'm drawing this out? So I know this looks like a tiny little profit trap, but we're actually covering a decent amount of space. If I go into option strat right here and zoom in on it, that's our profit trap. So there's 69.15. If we're below 69.15, again, at expiration. So the day of expiration, we come into the 5th opening bell. Okay. And here's how quickly that profit trap starts to fill up. If price is at 69.50, 69.60, 69.75, great. We essentially have nothing to risk on the trade. We'll keep that full dollar cool. Okay. But if we fall on Friday or fall on Monday the 5th, if we're coming back into a profit trap, I would say, all right, let's go. So point is, I'm kind of banking on if we're gonna have a Santa rally and we deliver positive flows, we try to test, highs or 6950, 7,000 where I see positive gamma, then this is a pretty good trade with a good profit trap. Okay. All right. So it's in Telegram. I'll post it. If you can get filled for a better trade than I did, good. I've seen a lot of people I got filled for 120, 110, went fine, great. Get a better fill than I did. But this is the trade. And it's a bonus trade. You don't have to take it if you don't want to. Just know the reward and risk. Okay. So I don't mind the trade. Um, what I'm going to look at is around this open, could I do a buy, sell, buy? This would be a slightly lower. Well, let me see if I can do this might be a bit surprising, but based on this expiration, if I go down towards the bottom end of this, this is going to be kind of playing defense on that trade. So if I went, let's go 70, 60, 45. That's right. That's playing right around the bottoms of this. Let me move this down one strike. So here, very similar trade. Okay. And if I get this trade filled for like $1.50 to $2, I'm going to take this trade. So this is going to be a pending order at $2. So I've got the one trade in, which I do think is going to be a trade that we win, right? And if we end up getting some defense where prices go to like 68.50 this week, I'm going to try to get a defense trade getting filled for like $1.50 to $2. Same thing. I get a $10 wide profit trap at the bottom end, and that will cover the risk here. So I'm going to put this one in for $2. All right. So totally optional on this one. Double check your contracts there, Mike. So I see your comment here. Again, when you share in comments, if you want to share it just to me, that's fine. But if you want everyone to see it, like make sure you send it to everyone. But when you're saying it keeps coming as a debit, make sure you have the 6915 as one contract, the 6905 as two contracts, the 69 or 6890 is one contract. If you double check your strikes and your contract sizes, this should be showing a credit because this is the 15 and 05, that is a 10 wide debit spread, and the 05 and 90 is a 15 wide credit spread. Because you're doing a wider credit spread, you should be able to finance that trade as a net credit, which is what we're doing. Okay, so just double check your strikes. Yep, and your contracts. There you go. Okay. And I will add to this one. So that's filled. And adding a defense trade to this based on 1/5/26 expected move. SPX 1/5 expiration. And I'm buying the 65, 68, 65 put, selling the 68, 55 put, and buying the 68, 40 put, looking for $2 credit pending. So that would give me risking 3 to make 2, but also have a $10 profit trap in there as well. So that one fills. I'll keep an eye on that one. That'll give me something to track this week. So as we're having this trade, do we understand where price has to be for us to make money? So look, we're only going to be live this week, today, tomorrow, and Friday. Wednesday, Thursday, no live sessions. New Year's Eve. Look, I'll watch. I'll be looking at my portfolio stuff. I'll be watching price like I always do, but no live sessions with, markets are open for like partial hours on Wednesday. It's New Year's Day on Thursday. Markets are closed. Okay. So do we know where price has to be? Okay. Where price has to be for us to make money on this trade is look, if price stays exactly where it is right now, we are going to make $1,100 on this trade. If price by Monday next week is trading around 6,900, 6,905, 6,910, we have a profit trap in this trade. Pin price is 6,905. So that'd be perfect, actually. If we had price hanging out around 6,900, 6,905, awesome. Let's turn our, $4 risk into a $1,000 profit. Awesome. If price is going to get some flows, like today's a pullback day, and then the rest of the week is like up, 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 positive gamma, guess what happens? Boop. We're up here. All of a sudden, our dollar credit is going to start trading for 50 cents debit, maybe down to 30 cents debit, maybe down to 20 cents debit. We can still take profit there. And that's totally fine. Okay. But to me, the way I'd like to manage the trade is I'd like to see if price can get to 69.50, find some positive gamma flows. If it tries to get to 7,000 by the end of the year, that's a nice little headline. Happy holidays. What a great year. All-time highs. Trump can tweet about it. The markets can be happy about a nice milestone. 7,000, nice round number. And then I would try to take as much out of that dollar as possible or just let it expire because I'll get the full dollar or even have a profit trap if the market dropped. Like by the second or the fifth, if the market was down 100 points, we actually come right back into a profit trap. So my goal is to hopefully see price be at 6,900 or greater by Friday or Monday. Okay. All right. Look, everyone said I'm getting a debit. Watch. Here's a different account. If I buy the 69.15, I buy that with one strike. I sell the 05 with two strikes. Okay, with two contracts, and then I buy the 68.90 with one. Can you see that is a mid price of $1.20 or $1.30? Yes or no? It should be a credit. Check your expirations, check your strikes, check your contract sizes. It should be a 1, 2, 1. Because the distance here in the credit spread is wider than the distance here, which is the debit spread. So this should show a credit, which it is. Trading for about $1.20, $1.25 right now. Oh yeah, the 68.65 one, that's not going to fill. Okay, working order. Let me switch accounts here. That trade is going to be pending because it's trading for like 50, 60 cents credit right now. It's not going to fill it. I'm not taking the trade at 60 cents. I want the trade at like $2. So that way, if price falls, it comes to me. I get a better fill. I'm risking 3. I mean, I guess technically, if I got $1 out of that one, that'd be okay with that. $1.50, $2, but $2 is what I want. So that one's not going to fill yet. If price falls to like 68.50, then we get filled on that trade. Hopefully, have another profit trap opportunity there. Okay. So I'm going to go into this account and try to get this traded for $1.25. So you have dollar 25, 5, 2, 3, 4. $1.20 is not $1.25 is not filling. $1.20 filled for $1.20. And then working order. That's 5, 2, 3, 4. Is 68.65. Buy, sell, buy. This one for $2 credit. 5, 2, 3, 4. Got it. All right. Okay. All right. You're right. Sorry, it's 40. There it is. So 68, 65, 68, 55, 68, 40. It is a skip strike. So we have 10 wide here, and then we have 15 wide here. That's why it's a broken wing butterfly. Yep. Thanks for catching that, Brett. Yep. So double check those. These are correct. This is a pending order. Okay. This one is filled. I just got filled on this on another account here. I took this one for $1.20. Filled. I'm going to edit this one. So this one was filled. I'm filled at $1 credit and $1.20 credit on different accounts. So that's what I'll be watching. So I'm risking $4 on one trade. I'm risking $3.80 on another trade. As long as price stays at 6,900, we're talking profit trap. If it's 6,905, we're talking perfect profit trap. If we're at 6,950, 6,970, 7,000 by Friday or by Monday, we'll take that dollar credit, $1.15 credit, trade it down to 5 cents debit, get out of the trade, take some profit. If you want to let it run to expiration, then the profit trap opportunity is there for Monday. So this is what I want to show you is when we get into trading on Friday next week, let's say that price is up to, I guess we can go into, let's go Friday closing bell. So Friday at the close, where's our profit? Friday at the close, where's our profit? If we're trading at 69.50 right here, I'll just put a line. So if we're trading at 69.50 or we're trading near 7,000, our dollar is going to be pretty much in full profit, very close to full profit. So if you want to take that by Friday, that's fine. If we come into Monday's trading and we're in the same window, we're going to see this is almost max out for our dollar credit. And then the timing is the profit trap starts to fill up because that is the day of expiration. So Friday the 2nd, end of day, if we're trading up to like 69.60 or 69.70, we're probably going to see most of that credit. We'll probably see like 70, 80 cents of that max credit. Okay. If we want to do Monday, by the time we come into Monday morning trading, which is the day of expiration, let's go to 9 a.m., 9:30. There we go. So that's opening bell. Now, if we're trading at 69.50, we might actually see a bit of a profit trap. Okay. If we're at 7,000 plus, we're going to pretty much max out our trade. The profit trap, it's kind of interesting. Like we get at 69.50 and 40 and 30, we actually get a bit of a bump right here. So this is what's unique about the way that like time and price works on a butterfly spread is I start to get the profit trap a little bit early that will eventually look like this, but I still have almost a wider profit trap on the upside of price. I still have the same defined risk, which is fine. Okay. But as we go into the day of expiration, if we're trading around 69.20, we actually might see a bonus profit of like $100. So we take the trade for $1, we close it out for $1 credit, which is kind of crazy, right? We enter for $1 credit, we close for $1 credit, that gives us a $200 winner. So we have a profit trap for really 69.15 up to like 69.30 or 40 the day of expiration. As we get closer and closer to, let's go noon on Monday next week. Okay. Now we're starting to see that profit trap around 69.15, 69.20, up to $2 to $3 of bonus profit. Not too bad. They are good to cancel, Sally. Yes. Very good. Yep. Good to canceled. So, a little bit of, let's say we're hanging out around the close from last week, Friday, which was around 69.29. It's right here. If by Monday next week we're hanging out near the all-time highs and we went higher, but we didn't stay there, or we're getting back up to those highs again, we're going to see a profit trap. That could be good. Okay. So I'm fine. I'm fine with this trade. I like this trade. I'm setting out for the week. That way I don't have to, feel bad about like, oh, I'm not going to place a trade for daily profit. It's like, look, I don't know what price is going to do this week. It's low volume. It's not a time where markets are coming back with high efficiency. The markets are either going to go nowhere, which is great, but we don't know that, or they're going to see the days where, we had a plus or minus 28 pre-market, 21.5 for opening bell. I mean, if prices go 30 points today, it's outside the expected range. It's like I'm not going to mess with that until probably the 5th of January or the 12th of January. That's when we should see normal trading resume. Markets, everyone's back at their desk trying to figure out how to, trade this market for 2026. Is the volume this week as low as last week? It could be very. I would suspect that it's going to be similar. Okay, it's just that time. It's like you have 2 days this week, just like last week, where it's like it's kind of holiday trading, thin hours. I think the markets are closed at noon or one on Wednesday, closed for the day on Thursday. So your trades are really today, tomorrow, and Friday. That's the only flow you get, right? And all this is hopefully just to try to get a push back up the highs. So anyway, back to this trade here. Does everyone understand how this thing's going to work the day of expiration? If we're all the way up here to like 69.50, 69.70, 7,000, we can leave the trade on for the profit trap because that would be difficult for the market to drop that far in a day. But if you've got a dollar 10, $1.15, you can close it for like a 5 cent debit. Just close the trade. Just take the profit. Okay. But what I like about this is if we're trading back up to like 69.25 or 69.30 coming into the day of expiration, we actually do see some bonus profit in here. And then as we get closer to expiration, this is noon on Monday. Let's get to like 2 p.m. 2 p.m. on Monday, again, between like 69.15 and 69.30, we start to see this profit trap still. And obviously, if we're trading exactly at our pin price around 69.05, like that's fine, right? We'd have a bonus profit of a couple $100 in addition to our credit. So we'd have like $300 to $400 of profit right here. And at expiration, just go into the final, close. This should be all green. So this will be all green. And this will be all green. Oops. So at expiration, this is all profit trap material. Okay, so either our dollar. So we got filled for $1. On another account, I got filled for $1.20. That's the profit that I would expect to make if price is up here. If price is here, I'll put a flag here for live price. We're just going to keep our $1 credit or $1.20 credit. If price is at 69.50, we're going to keep our same $1.20. The sweet spot in this trade, if we're going to manage this thing on Friday or Monday, the sweet spot in this trade is really on Monday if we're trading between 69.15 and about 69.35. Okay. And it, obviously, like 69.05 would be good too. But 69.10, 69.15, 69.35, you get the kind of swelling of that that right tail that gives you that bonus profit. So the goal is let's make, $1, let's make $1.20 and be happy on the trade. But the bonus is let's hopefully have the opportunity for a big fat profit trap. Okay. 2 p.m. on Wednesday. Okay. So still limited trading hours on Wednesday, and then markets close on Thursday. Sean says, I missed this one. Yeah, this trade is filled, but it's still offered. I mean, I've taken the trade on 2 accounts. So the trade is filled. I posted it in my public Telegram. So you're all welcome to take this one. So here's the trade. It's still offering $1. Where are we trading at right now? We're at 69.03. So it's probably trading for like $1.20 right now. I'm going to set a chart alarm. I'm going to set a chart alarm at 68.50. Okay, just kind of spot check for the week. 68.50. I'm going to check for the fill on my defense trade. And if we come back and gap fill around 69.30, I'm going to set a 69.30. And there's a 7,000 handle. I'll go 69.50 because that's a big positive gamma as well. There we go. So if price goes back up into fill this gap, profit. If we hit new highs, profit. We hit, new highs, profit. If we come down for the week, there's trade 1. Here's the defense trade 2. If we can hold this area where, maybe price can bounce and work its way back up. And look, if we're flat for the week, we have a $1,100 winner here, and if we get filled for I mean, if this one gets filled for $1.50 to $2 credit, I'll still take that trade as well. I have it pending for $2, but if I'm watching it, if price is down here and that chart alarm goes off at 68.50, then I want to see if that thing will get filled for $2 or better. If it's $1.50, $1.75, I still think that's a great trade. Okay. So is there risk on the trade? Yes, there's risk. But I'm going to see if, I'm truly going to see if the Santa rally wants to show up. Santa has not showed up for 2 years. So if he shows up from technically Christmas Eve to New Year's Day, then we fill the gap and off we go. Okay. Is there risk in both? Yeah. I mean, if I lose this trade and I get filled here and price ends up going to fill this gap all the way down to 68.40, what happens? I can lose this trade and lose this trade. So there is risk. Where could price take us? Well, I mean, that makes sense, right? We have a gap right here. So price wants to come test this gap. Here's what I'd like to see. Either one, we don't test the gap. We don't have to worry about this trade. Or two, we get the cleanse over with and then we rally hard into the end of the week. Right? So, I mean, kind of best case scenario would be we get price to stay at 6,900 or better. If we're 6,900 or better, that's a $500 winner plus our credit. So we'd have like a $600 winner on that 6,900 trap. And if we get filled at this one around 68.55, that was my strike, wasn't it? 68. Yeah. So if we're around 68.50 is another profit trap. 68.50 is another $500 bonus trap in $1. Now, here's the deal. Let's say that I get price to close at 68.50 on Monday. Well, I'm going to lose $4 on this one, and maybe I can make $600 on this one. So net, I can still make money having these trades. This one has not filled yet, not yet. So this is there for defense if we need it. If we need it. I mean, I don't want us to need it, but it's better than feeling like this is a one and done, right? I mean, at least I have a defense and a plan for the week. Okay. All right. So whatever, being creative for the day. I'm not going to force a daily profit play because it's light trading. It's going to be a little bit of an inefficiency market. I'm not going to guess where things are at. I'm not going to try to contain prices in a plus or minus 20-point move. Um, I mean, we've seen that a lot the last couple of weeks, which is wow. We had a plus minus 30 and the market went 60 points. We had a plus minus 40 and the market went 80 points. Right? We had a plus minus 20. The market went 25 points. It's like, okay, stay inside of our range. Because if it doesn't, daily profit plays, no bueno. But that all goes back to probably market efficiencies when it comes to I'd say probably by the 12th of January, we're like back into like normal efficiencies. Okay. New York Stock Exchange, Wednesday, full trading day, although I've read two. So let's just look. Um, so I'm seeing here normal trading hours, but closed on New Year's Day. Bond markets closed. Let's see. So let's see if there's any limit. All right, so we might have normal trading hours on New Year's Eve. Got it. How do you answer a question with a picture that says the exact same thing? So full day 9:30 to 4. All right. I'll post this in Telegram. Okay, pre-market. I'm wondering what happens like post-market New Year's Eve if everything kind of closes up early, if futures closes early. So bonds close early, 2 p.m. So we've got bonds at 2 p.m. New Year's Eve. Yeah, I knew there was some type of disruption, but interesting equities are open. What kind of news do we have this week? Let's go this week for news. Tuesday the 30th at 2 p.m. FOMC minutes. That's it. Wednesday morning, New Year's Eve, unemployment claims. The rest is bank holidays. So yeah, I mean it's going to be a pretty quiet week when you've got all these bank holidays. Liquidity is going to be a little light. Volume is going to be a little light. Okay, so just setting expectations. That's all. Because we do have normal trading hours, I don't mind being live with you on Wednesday. If you want to be live today, tomorrow, and Wednesday, that's fine. I think here's what I'd like to do. So I am going to have class today at 11:30 a.m. Eastern time. If you'd like to join me for waterfall income, I'm going to have a live trading session. So just going back to my overall look, waterfall income today. We have class in a trading session at 11:30. I could talk about that right now. You're all welcome to join me if you want to jump into my waterfall income service live session, and we'll put a trade on. Probably similar to what I did before. I actually want to spend a bit of time this week talking about trade size. We have open positions right now that look pretty darn good. We have trades running into the end of this year. We have trades running into the middle and end of January, and even into one. I think the longest we've extended one out is into what was it? I think we extended one into like May, but it's a pending order. So I might revisit that trade today. Um, I think what I'm going to consider is like strategy one is going to be the most cost effective and also like the smallest risk in waterfall income going into 2026. Yeah, it's good till canceled. Your May order filled. Did it fill? Don't we have another one though? So this is I'm going to call this one the Santa Rally with Trap. So Santa Rally with Trap 1, if this other one gets filled, that'll be a Santa Rally with Trap 2. The May 15th one did fill. Okay. I thought we had another pending order though. I'm looking to see. Yeah, we have another pending order. The strikes are slightly higher. We talked about this one last week. So we have slightly higher strikes. This one should be a risk. We'll reassess this trade. This one's for a buck five, and we have a 10.25. I think that gives us like a 15 to 16% room for error. So anyway, we'll play around with those today at 11:30. Okay. All right. That being said, 1 second here. Sorry, I just had a question pop in from support on my waterfall income. Okay. And one more thing. All right. So here's the dealio. Water income today at 11:30. If anybody would like to join me, 11:30 a.m. Eastern Time. Waterfall income live session. So if you are a member of Waterfall Income, come join me 11:30. If you are wanting to become a member, join me. You have class 11:30. We just did a masterclass on Waterfall last week. I can give you a quick like kickstart class today, discussing some of the trades we have in, and probably looking for a couple of pullback levels. Look, I'm going into 2026 with like a bit of caution. I think that we're sitting here at all time highs, super exciting. Couple things that I think would line this market up for continuation. The market is typically a forward thinking mechanism, usually looking out like 6 to 8 months. Right now, if there's anything that's still good to be priced in, if we have strong Q1 earnings in early 2026, the market probably continues its push. If we have rough, like I would say flat or even negative Q1 earnings, the market quickly adjusts. Okay. We are sitting at a 25 times earnings S&P 500 with an historical average around 17. We're in like the 99th percentile of earnings. Or if you want to flip that and say like we're in the top 1 percentile of like all earnings, like as good as they've ever been. Okay. The Cape Shiller ratio is like the top 1 percentile. Like that's not good because what it means is forward 5 years, forward 10 years, the market could give us, and this is what we don't know. The market could literally give us another 100%, right, to the upside. And then it gives us a 50% pullback. And where does that take us? Well, it leaves us with like, you look out 5 or 10 years, the market's returned 0% in nominal terms or real terms. But we don't know that. So the history shows like earnings at this high, the U.S. markets are truly priced to perfection. And it's not that the U.S. can't be steady, it can't be stable, but the idea of thinking we're going to generate 10, 15, 20% a year every single year, I think that traders with those expectations are going to be very, very disappointed. I think there's ways to do better than the index by trading the markets. I think this is going to be an active traders journey as opposed to just buy the SPY, walk away, expect to make 20% a year. I think to put this in perspective, look, the market has been very generous to a lot of traders in the last decade, right? If all you did was participate in the market, you had a pretty good chance to make some money, right? If you time the market in any way, shape, or form, buying any of these crazy dips we've seen in the last decade, it's been a gift that the market's been just pumping higher, and I mean, for the most part, it's made Wall Street look pretty stupid. Granted, Wall Street makes tons of money, okay, but it's made like the average hedge fund look pretty stupid because what's their job? Some hedge funds are long short, some hedge funds are long only, some hedge funds are alternative assets and non-correlated assets, blah blah blah. Typically, the hedge fund game is to manage risk to the downside and try to get as much of the index or benchmark performance to the upside. Typically, they fall short. So let's say and here's a good way to put it in perspective. Let's go Barclay Hedge Fund Index here. This is something I've used for years to track myself, in addition to the S&P. Let me see if I can get a few more years here, but these are the last few years. I was trying to get more. Okay, so 2020, 2020, 2021, 2022. Here's a good example. 2022, this is where I'd say, okay, hedge funds are a little bit better at their job than just letting full risk happen. But the average of about 3,000 hedge funds out there, -8% was the return on average. Okay. The average 401k was down about 15 to 20% in 2022. The market didn't start making a comeback till November. A lot of people were beat up. Sentiment was terrible, and the market had a peak to trough of over 30%. So most passive investors were down a lot, and that felt like crap. That was where, even though we didn't technically call it a bear market, it was a bear market from a 20% correction or more. But once we got out of it, November, December 2022 and into 2023, okay, 2023 was a 20+% year. So we had a like 30% correction here, so -30%, and then we had a plus 20% year and a plus 20% year, and we're looking at like a plus like 16 to 17 this year. So this is just the markets, right? So if you're down 30%, then up 20, then up 20, then up 17, you made a pretty nice comeback. But actively managing positions, you can see, okay, we take on far less risk, but we're getting about half the profit here, about half the profit here, and about 60% of the profit here. So that is the trade-off. Professionally managed really should be about risk management. My job is, I'm trying to make as much money as I can, but risk management is the most important thing. The nice thing is, because I don't have a $500 million fund. I don't have a $1 billion fund. It's like I can be very agile and nimble with individually traded accounts. So my ability to take, this year was like down 7% during Liberation Day and up 35% into year to date. So I've beat the benchmark pretty well. I almost doubled the percentage of the S&P this year, and I still had about 50% cash that was collecting in an extra 4% kicker. So that's my job, is manage risk and try to get as much of the upside, if not capture the upside as much as I can. Okay. So this year, all I'm saying is we have a big fat unknown, which is, where will this market be by the end of 2026? Okay. And I'll ask this question like I do. How many of you think that the market's going to be higher? Because look, if we go into, let's say we're at 6,900 or we're at 6,950 to start out the year, how many of you think that the market is going to be higher than that at the end of the year? Type in higher in the chat if you think the market's going to be higher. Okay, and I'll look to see if anybody types in lower, because I'm curious. I mean, and I will say this: most likely everyone's thinking higher, 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 which is fine. However, do you think? Here's what I want you to type in. So Zhang says lower with November. Okay, but do you think that lower is going to be literally like the market can go higher, higher, higher? Do you think that lower post midterm elections is going to be so bad that it takes out the gains for the year? Do you think we're going to finish the year negative? So type this in. If you think we're going to finish the year positive or negative, let me know what your forecast is. I'm just curious. No wrong answer. Because if I think this market, front loaded would be, the market does whatever it can to build in whatever bulletproof gains that it can build in. And then if things get a little choppy during the midterms, I do think the market can quickly wipe away gains if Trump and his administration lose the majority. Because I think the market would be forward thinking and it thinks about the policy changes. I think the market could wipe away a lot of gains quickly. Does it finish the year negative? Not necessarily. If we're up, 15% going into midterms, could it wipe away 15% and finish flat? Sure. Could it wipe away 5 or 10% and wipe away a little bit of gain and finish single digits? Sure. Do we do structural damage? Maybe we finish the year positive, but going into 2027, new policy. Trump's still president. It's not like we're going to have aggressive policy changes without a fight. It's just, if we have Senate is Republican majority, House is Democrat majority, it's going to be a split. right? So nothing gets done, nothing gets passed. This aggressive policy might have to take a back seat and get put on the back burner. But if the big swing to me would be if everything swings. If Republicans lose the House and the Senate, then I think it's going to be a crapshoot. Because now, what about tariffs? What about current foreign policy? The only thing that we agree on bipartisan wise is pretty much military spending and raising the debt ceiling. that's all. That's all we agree on. Whether it's Republican or Democrat in office, the one thing we always pass is military spending and raising the debt ceiling. So you've got socialism for the poor on the left. You have socialism for the wealthy on the right. That's your two-party system. So I'm just curious. I wouldn't be surprised if the market is. I will say this. I can rack my brain with a lot of thoughts, but it's hard for me to build a true bear case for this year, for 2026. It is easy to build a correction. It's easy to build in, like, hey, look, Nvidia loses its spot as number one company in the world. It gives back $1 trillion in market cap, and something else super, like maybe Google becomes world number one. Is that enough to have like a rotation at the top and the market dips 5 or 10%? Sure. Can earnings discount a little bit? Sure. But there's still so much technical support here. I wouldn't really be painting a bear picture unless we're back below 6,000. If we're below 6,000, then yeah, we've got technically a lot of reasons that would be failing, and I would be waiting. But I would say between any dip in the low 6,000s, any retest of this level around 6,140, even down to like 5,500, I'm still a bull, man. And like I will say that this is probably one of the most hated rallies we've seen in a long time. I even said it. I said it literally at the bottom here when Trump tweeted, "It's a good time to buy stocks," and the market had like a 7 to 10% day in one single day. I thought, if this freaking market puts in a bottom and goes back to all-time highs, that is the most unnecessary correction that I think we have seen since COVID. And COVID was like a global pandemic. This was like a self-induced trade war that just it was. And I call this like the snow globe. It's like Trump took the world and just shook it up. And for a moment, nobody really knew what to do. It felt systemic, and I was cautious. But once we bottomed out and saw that like cup and handle, I mean, once we got above all our moving averages, all the momentum came back in. We broke highs and we just never stopped. So what a stupid correction. It needed, yeah, but how it happened, and it was essentially two flushes, right? We had Mag 7 rotation, trade war, and then we pivoted and did the exact opposite. It was like a 180-degree turn into, well, we're going to do the opposite of what we just said, which is why we're at all-time highs. So whatever happens in here, volatility. But I would say I'm going to give the edge to the bulls. Am I stupid bullish? Not really, right? But would I be surprised if the market's at 7,500? No. Would I be surprised if we're close to 8,000? Not really, because it's like it has to happen. The U.S. economy is so tied to the stock market that you're talking about some of the wealthiest people ever in our country are on the verge of they're retiring, or they're retired, or they're about to be retired in the next 5 or 10 years. It's $80 trillion in assets held by baby boomers. If there's one way you want to piss off the wealthiest people in the world, mess with their stock portfolio, mess with their real estate. That wealth effect has like leveraged implications. So I think that there will be lots of jawboning, lots of backstopping, lots of ways to kind of run this thing hot until whatever, the fourth turning, if you wanted to call it that. But nobody knows when that's going to be. I mean, I'm being a little cynical in saying that maybe the 100-year anniversary of the Great Depression, we start to see the market like really top out. So, look, I would not be surprised in the next 5 years if we see a 30 to 50% correction in the markets. Does that mean I'm bearish right now? Absolutely not. Okay. It is hard to be a bear. Okay. When it happens, it could be the greatest trade of your career, but I mean, you've seen it with a brilliant trader when Michael Burry, yes, he was a big short beneficiary, but what has he done for the last 15 years? He's been so short and so bearish and so cynical, and it sells, puts butts in seats, and it gets him a lot of followers in it. And he's not like an emotional trader. That's what's kind of crazy, is he's rational, but this market isn't rational. And when you make a fortune on a short, on an outlier and a black swan, you feel pretty smart. And I can see where that challenge is like, I want to do it again because I made so much money there. The asymmetry, I get it. But there are so many tools and levers and resources and programs and backstops and everything that just keeps this thing going, right? So, do I think the market finds a way to be higher? Yes. What I think a gift early in 2026 would be, we get a pullback into here. Okay. We find the same support levels and we start working our way back up, or we have a legitimate correction. Let's say the market does top out, it goes sideways, and then it works its way higher as things like maybe look a little bit better with earnings. Okay. Or it goes sideways, measure this move, measure this move. This is kind of our bottom. It gets a little bit flaky and nasty in here, higher volatility. Wait for a trend line break and start participating on the right side of it. If the markets are uncertain, we don't have to trade it. That is why I'm building out like this strategy for the new year. Okay. This is why I want to talk about risk management and probably go into more of a strategy one deployment of waterfall income for the new year. Because I don't want to be on the hook for some, higher risk strategy when I don't know what the market wants to do. But I would be pretty confident to say we're probably not going to finish 2026 below 6150. We probably won't finish 2026 below 6,000. So the more we go up here, the more favorable that looks, as far as like, yeah, we're probably not going to finish based on probabilities, probably not going to finish at these levels that I'm talking about. So my big question is, in here, it's like, what does the market do? I think if we do run hotter, if we run hotter, that's fine. Okay. But draw a rising wedge, and at some point this thing goes sideways and it corrects, and we have a dip to buy and try to get ourselves back to all-time highs again. So if Trump and company maintain midterms, and how do they do that this year? Populist policy. How do they do that? They send checks to the military. They send checks to individual households that qualify. They throw every child born $1,000 starting account. Is that good for inflation? Probably not. It's probably terrible for inflation, but it at least helps boost spending, which is 2/3 of our economy. And whether people spend it on stuff they need, we claim that all these stimulus checks like boosted the economy back in 2020. It's like, what did people spend it on? I don't know. I don't freaking know. I just know that I got one check in 2020. I didn't get three. Um, did it help me pay for my mortgage? Like, it didn't. It was a little, like, people were locked up, and what did they spend it on? They went shopping. You know, this would be different, I guess, because the world is open, business as usual. But now you're giving everyone a couple $1,000. They're probably going to spend it. Maybe it's a little vacation. Maybe it's pay down some credit cards. I don't know. It's a lot of stuff, but it's going to find its way into the economy, into the markets. Even during the COVID stimulus checks, about 12 to 15% of all of that money found its way into the markets. I don't even know how many hundreds of billions of dollars was it during COVID? Like, household checks were in the hundreds of billions. Total stimulus in the US was like 3 trillion, 4 trillion. Global stimulus was like 6 or 7 trillion. 10% of that, 15% of that found its way into the markets. That is added liquidity. Added liquidity tends to be good for the markets. Slightly higher inflation tends to be good for the markets. So it is, I just think it's hard to paint a permanently bearish picture. Those got laid off for getting 1,000. Yep. And so layoffs and PPP. I mean, I can't tell you how many friends of mine that had businesses that took out PPP loans that were completely forgiven. And I'm not talking like some chump change, like $50,000 loans, hundreds of thousands of dollars that were forgiven. That's crazy, man. Like you wonder how we got to 9% inflation. That people had a lot of money at that time. So, was it advantageous to be a business owner? Yeah. Was it fair to take out hundreds of thousands of dollars in loans and be forgiven on it when people can't get a freaking student loan forgiveness? Like that, it's a little shitty that you're going to do that. You're going to take people and their families to their graves and beyond to recoup student loan debt, but you'll forgive, you know, business loans for a pandemic that, whatever. Just very different treatment, right? All right. Anyway, blah blah blah. Point is, I think it's going to be difficult to paint a crazy bearish picture, and I think that the first 3 to 6 months we have added liquidity. If we are sending checks to households, if we have the big beautiful tax benefits, like we're going to have some good tax treatment for the first half of 2026. We are probably going to keep the narrative alive and well as far as like wanting to stay with this growth narrative. What can derail all this? Honestly, inflation can derail all this because the inflation story is going to make the Fed change everything. If inflation gets out of hand again, the Fed will not be a dovish Fed. I don't care if it's Trump can literally handpick the person that he wants to be in the Fed. If inflation runs hot, the political pressure to tame inflation will be much higher than, keeping the interest rates lower. Nobody gives a crap about interest rates if everything we're paying for is more expensive. Because right now we're at, sub 3% inflation, but even 0% inflation, does not mean that prices go down, right? It just means that prices stop going up. So we actually have to have deflation if we want to see prices improve for us, which means we probably have to have a recession. But what have we not really had since 2008? A recession. Because that is what has been built into the system. Do not let this thing fall. Do not let this market drop. Put all these backstop levers in, add liquidity, put out fires. We do that. Trump has done it. The Fed has done it. We have backstopped a lot of small underbrush fires since, 2009 when we bottomed out. And it's scary because you feel like, how hot does this thing run until like one of those fires can't be put out? Well, that's the fourth turning step stuff where we're going to have, truly like another awful correction. But I just don't know when it is. And I will say this, I can make this very simple. If this and this and this and this, we just have individual trades that add up to our overall, like we don't have to be exposed to the big picture. If I know when to stay out, we stay out. If I know when to participate, we participate. And we do it with, responsible trade size. We expect to win, yes. But if we lose, it's not the end of the world. And we're limiting all that correlation exposure to the overall market. Okay. Because I will say that if we get a pullback here, if we get a pullback to the same 1120 candle or the 1010 candle, I'm kind of interested in taking some dips, right? If we pull back here, I'm interested in taking some dips. If we pull back here, I'm interested in taking some dips. What's my timeline on all these trades? I don't know. Maybe a month, maybe 3 months, maybe a year. Do I think the market can find a way to go higher? I would hope so. But the point is, like, we can trade this market. It's just, I don't want to be exposed to a 30 to 50% correction without having something in place that keeps me protected. So if anybody said trading is easy, look, we have had a very generous market for the last decade plus. I mean, in truth, it's like I've been trading since 2000, not even knowing what I was doing in 2000. But I've still done pretty well by the markets by just being a participant, right? Let alone when I got really serious about trading, which was like 06, 07, started trading full time, like 2012, 2013. Yeah, I mean, it's been, if I felt that it was easy, like, yeah, I've left plenty of profits on the table. But when I started managing accounts, it's not about how much money could I make, because making money actually is the easy part. It's not losing it when this market has these inevitable, ugly, silly, terrible, unavoidable corrections. So will a bear market happen again? Yep. Okay. And I think the scary part is going to be the next bear market that goes like this and then it goes lower. Whatever that looks like, whenever that happens, that is going to be when most traders are going to get absolutely killed in the markets. That will not be me. That will not be us. It shouldn't be us because we don't have to have that type of overall correlated exposure. But the markets do make you feel like there is literally nowhere to hide. If we have a nasty 20% correction, right? And then the market goes down another 20% here, that leg lower is going to destroy so many people that thought they were good at trading. And I'm not here to say like I can't wait for that to happen because I don't want to go through that either. But I do know that we will come out of this as survivors, hopefully unscathed, hopefully profitable. Because the market can be down 40% and we're actually break even or better. Guess what that just did to us as this market finally gets out of this crap and then builds it up to a 4, 5, 6, 7, 8, 9, 10-year bull market, right? It's the dollars that you can gain on the bottoms of these liquidity cycles that get us to the top again, right? And if we had this market down, 40%, we're talking about a what, 80 to 90% recovery, almost doubling your worth if you wanted to participate. Obviously, you can trade it bit by bit all the way through, but it's like these are the ways you generate generational gains. This is how you increase your annualized basis by, 5 and 10% a year by having the opportunity and liquidity to participate at these, really ugly times. But how do you think the wealthy have got wealthier over the last 2 decades? Having assets to reinvest. So even though the market is down, they still invest, you know? So anyway, we'll see. But does anybody know? No. You will never hear anything definitively come out of my mouth. I have traded for way too long that even with my trades that I have running right now in waterfall income that have a 99.5% chance of profit, I will still never say it's a guarantee because I know it's not. I know there's always risk in everything that I do. Even despite the highest probabilities, there's still risk in everything we do. So I will manage risk and I will trade probabilities. And that's all we can do is control our trade size, control our risk. Hopefully that helps us control our emotions a little bit better. And that's trading. Okay. All right. Anyway, I know that was a bit of a, rant or public service announcement, but all that was stemming from the question of do we think that the markets will be higher or lower? I think I hope that you appreciate the market's abilities to go higher. Like it takes, I mean, having a correction here and there, having a 3, 5, 10% correction here and there, it lines up in the market, latches onto a narrative, and we have a correction. But the big picture is so difficult to change because as long as our economy is still functioning, as long as there is not just like some existential crisis or some exogenous shock to the system, it's just a deleveraging. The market like needs these little windows of like deleveraging, cleanse it a little bit, get some of the crap out of the system, and it finds a way to grind higher. Okay. I think a challenge for this year, in addition to the political stuff for like midterms at the end of 2026, would be if we truly are going to see like a rotation out of Mag 7, we'll find out. But because they are so big and it is so concentrated, if people are taking, there's trillions of dollars in market cap in Mag 7. If that trillions of dollars goes into, I don't know, a 1% additional allocation of every fund manager in the world to gold, that's a big rotation, right? If it rotates out of Mag 7 and out of tech into utilities, into basic materials, into commodities, that's a big rotation. Those are all much, much smaller and they can run a lot higher. So that is going to be an interesting, flow and kind of something to track through 2026 is Mag 7 still, the big king of the mountain where it's, dominated by top 10 stocks, or is it going to rotate away? Because I do think you have an insane amount of concentration risk. That if you're in Mag 7 and all these individual stocks could be facing, we could see Mag 7 facing 10, 20, 30, 40% corrections, individual stock wise. Like we could see Apple cut in half. Could we see Amazon drop down to $150? Sure, maybe. Could we see Broadcom drop to $200? I mean, all these could have major, major corrections, maybe. So there's a lot of market cap riding on that when these are all $1 trillion companies. And as a market cap weighted instrument, that's going to be felt. And you can't just go hide out equal weight and think like, well, I'll avoid that. It's like, no, there's still a part of equal weighted S&P. There's still a part of equal weighted NASDAQ. But if they lead to the downside, they will drag everything with it. So anyway, small caps could be an interesting story this year. The earnings expectations for small caps are outrageous. Um, it's like a price to earnings expected at like 60 times this year, which is like one of the highest they've ever had. 59 times earnings is what's expected for Russell. I think the S&P is like 13. So it's I don't know. It's really lofty expectations on small caps, and I don't know if that's right. I think that we could definitely have like an earnings compression type hurdle that the market quickly realizes. Oh, we're not going to see ridiculous earnings, and maybe that compression leads us to a little bit of a chop zone. So anyway, look, point is, it's really challenging to know anything where this market's going to go. But what can we gather? What clues do we have? It's very supported as long as we stay above this. There's a nice level of support to keep the market above 6150. Okay. If you give the market time, it tends to want to go higher. So as long as we have, here's the deal. If we have corrections, these are all areas to be looking to buy some dips, get some light exposure. And then once we get confirmation to kind of come out of this, if we go back to highs, you make a lot of money doing that. But it's not being overexposed at these highs. That's all. Because if the market goes higher, okay, cool. But it just gets more overbought, more divergent. And at some point that probability runs its course. And we have a correction. We have a reversion to the mean. So anyway. Blake says, I keep buying the dip on silver. I'm not sure when it's going to SLV. Yeah. I mean, that is a nasty move on silver. I hate to say it, but this had a correction here of around 15%, and we just did it in one day for the same type of move. Okay. As tempting as it is to say that this is where I want to buy the dip, I can't do a full position. I would say if I put $1,000 at this, could silver be back up in years to come? Sure. Hey, I remember when that market sold off 15% and I put a couple bucks at it. But a one-day correction doesn't make a trend. A one-day correction is not, if we go down for the day, do we come up for the next couple of days? Sure. But is it a lower high to lower low? Very possible. So, look, it's not a bad opportunity to buy the dip. Could silver be above $100 in the next 5 or 10 years? Probably. So if you think about it from a long-term perspective, if you're putting a little bit in here and it goes up to $150, great investment. But if it has to go from 70 down to 50 first, I just want to make sure that I can stomach that type of drawdown. Okay. So I could see a near-term top. And like I said, if I put $1,000 at it right now, look, if you've been in this, by the way, like freaking take some profit, man. Like anybody that's trying to put a huge concentrated position in silver or gold, I think you're playing with just tons and tons of risk. Or what's even more disappointing is you have a crap ton of profits that you're going to give back very quickly, right? Imagine for a second that you took whatever it is. You take, 50 grand and it's worth 100 grand. It's worth 150 grand. And all of a sudden now that 150 is down to 125. Those swings, what gave you a lot of wealth very quickly can wipe it away in literally a day. And, it's just going to cause a lot of volatility. I've been saying that for months. It's like this, you don't see charts look like this that just go, we'll just go sideways for a little bit. It doesn't happen. Usually they go up and they go parabolic and they have some crazy, ugly correction. And then the market figures out that it'll work its way back up. I can show you the chart on coffee, on lumber, on cocoa, on copper. They've all did the same thing, especially in the commodity space. They typically do this. They make sharp tops and they correct really aggressively, and then they kind of trough out, and then we can get back in. But I don't know. It's just I don't mind dollar cost averaging. I'm not calling the top. I'm not selling silver. It's like have protection, yes. Keep it a percentage allocation, trim it accordingly, and medium to long term, I think silver is going to be higher. You know, but what will be a surprise is if we have a 1 day sell off and we're right back to highs or higher in the next 30 days. I think that something is like wrong with that chart. It's great for the near term, but I don't want to see that be the if that's the new behavior for silver. It's like, I don't really want to trade that. You know, it's way too much volatility. So anyway, we will see. It's dropping. It's offering a nice discount. It's probably going to get deeper. That's okay. Um, Gold still, to me, has to have a pullback to the 200-day moving average, and I think it will. So whether this is a top forming, whether this is the start of maybe a rising wedge type pattern, right? We could go sideways. It's like we could chop around in here. Everyone could get all excited that it's just buy the dip, buy the dip. It's like that's fine, but it will roll over. And if we get a correction, we find my moving averages and we buy it here. And guess what happens after a big range or a big trend? A range trade. Because now everyone wants gains on gold and silver. And what does the market give us instead? Range, right? Everyone wants 100+%. But what does the market give us? 0. Like that could be what we deal with. So if you look at it as a medium to long-term investment, I think gold and silver is great to have in the portfolio. But it's all the speculation and all the gamblers that want to jump in and chase and hope that they can get these big home run. It's like maybe just not the most sustainable way to trade, if you ask me. So just be watching. I want to watch these moving averages. So be careful. That's all. We're pulling back to the 21-day moving average. This is a daily time frame, by the way. The 50-day would be nice. We've tested it tons and tons and tons. We stretch a long ways away. This is crazy. We were 30% away from the 50-day moving average. I don't know if that's ever happened outside of the same historical runs we've seen back in like 2011 and 1980. So it probably has a pullback, and I'd love to see a chance to buy some dips. Last case here, I took a fib from low. There's a low. There's a high. So do we pull back? We're hit the 2-3 right now. The 236 is a Fibonacci number, right? We hit that today. So there's a 30%, which is a GAN retracement, and a 38%. Would I like to put a little position in there? Sure. Position 1. If it pulls back to equilibrium, the 50%, position 2. Pulls back to a golden ratio fib 61%, sure. Position 3. Whatever you want to invest, those are good ways to do it. Even if you don't get all the way into all 3 positions, at least you're finding a way to tactically participate without going, full in, all in on one level. Because if you're going all in on one level and you can't handle a 40% correction, you're going to bail. So put something in, get some more levels, build your position up, add to your winners, get back to highs. We go to 5 years from now, if we're trading at $200 silver price, you're going to be thankful you had some participation in here. But I don't want to see silver go to 200 now. I want to see silver give us something that we can trade. So anyway, I was excited about silver too. I close out a silver here. We had I was anticipating a correction. I got out within like a couple dollars of this high. Boy, was I way early to this extra run that we had just recently. So yeah, I still had some participation where I closed out my majority trades here, within a couple dollars of the top. But then once we had our correction, I was back in with another small stake. So I went from having about a 5% allocation to silver that blew up to about 12%. So I trimmed a lot of that profit, trimmed it back to my 5%, and then added more to kind of get back into where I wanted to be because I took everything off the table. So I'm back into about a 2% position right now that I want to build it back up to 5. So I'm going to try to do that. and I'm willing to say 5 or 10, but I think you're just going to be dealing with a lot of volatility that not every trader can enjoy. Okay, we'll see. So anyway, Blake, I didn't have a chance to do my waterfall, like the whole spiel today. But I will say this: if anybody is new to the session today, if you'd like to get into a trade service, I'm going to run the session in the next 30 minutes. This is my waterfall income. So we have 124 live trades in the service. We have won over 94% of our trades. Our average return on risk with winners and losers is about 16%. My goal is to average out about 15 to 20% return on risk every single week that we trade. Okay. So if anybody's new, this has been one of my most reliable income services. We trade every single week. We trade every single Monday. We have taken in the batch of December 2024, when the market was down over 8%, we took one loss in that batch. And then we've had winners. Even through 2025, when the market went top to bottom 20%, we took one loss. So we have survived a lot of pretty crazy markets the last year and a half. And we've had lots and lots of winners to show for it. And we still have another 5 or 6 open positions that are looking pretty good. Like literally from probabilities and volatility perspectives, the options market showing a 99.5% chance of profit on our remaining 5 positions. I told traders as a class last week, we'll revisit it today. If you want to take the profit, take it. As long as we're like 80, 85, 90% of our max profit, take the profit. It's okay. But we're holding these trades typically between about 15 to 45 days. Sometimes longer. I don't mind going longer on some. But anyway, really fun service. This type of strategy allowed me to survive COVID, allowed me to survive 2022's true bear market where we were down over 30% peak to trough. And I took very few losses in this service. So it's been great. It's in fact, like any time that I am cautious in the markets, I tend to default to waterfall income just because I give myself so much room for error. Okay. So I will say this. I'm not going to go through the whole spiel since we've already been live today for over 2 hours. But we are running a special for everyone that's in my daily profit plan, coming to see me every single day. If you want to trade with me like clockwork on Mondays, same time every single Monday, we're live at 11:30. There is a link in the chat that Blake just dropped. So I'm going to run this class in 30 minutes. So 11:30 a.m. Eastern time. We are live on Mondays. If you'd like to come in and join me for that class, jump on in. Cool. Okay. All right. Let's see. We did a lot today. So big crazy moves on gold and silver. Our trade this morning on S&P was at 69. We gapped lower. We had a little bit of chop this morning. Gamma's changed a little bit. Now that 69.55 was the largest. Now it's not. Let me see what the order flows look like for the 31st, which is this week. Okay, we're trading right here at 69.01. I still have 69.25, 69.50. Like, look, if these are gettable for this week, like by Thursday, or I guess this is Wednesday, right? Wednesday is the 31st, and then Friday, because the markets close on Thursday. If we have a gap lower, we kind of hang out around the 6,900 handle, and then some options, or I mean, whether it's options, whether futures, whether it's the Santa rally, whatever. See if we can get back up to like 69.25, 69.50 by the end of the week. 7,000 would be a nice little milestone to see if the market hits it sooner rather than later. And then I'm just going to draw a big fat question mark and say, yeah, we kind of have to see how the market's going to be. And I don't mind trading week to week. I don't mind trading month to month. I don't mind a wait and see. I don't mind not ever like overexposing one individual trade. There's plenty of ways to do it. So, I don't know. We'll see. But our bonus trades we put out today, we'll keep an eye on this. Got filled for $1 and $1.20. I'm on 2 trades, 2 different accounts, but $1 is my trade. I'll watch that one. And then if we come down to like 68.50, I'm putting in a little defense trade here to see if the market can hold that level. That is the expected move on the week, by the way, which is why I'm using that level as a defense trade. Okay. If you can't make Monday waterfall trades, yep. So all the trades, that's a good question from Skip. So if you can't attend the service on Monday mornings at 11:30, what I do is I send the alert out by noon, and it goes to your classroom alert section. You'll see it pop up in my Telegram as well. So in my general Telegram, it will show Let me go with like individual classes here. So you can see here's daily profit play, waterfall income class starting now. Check the alert section. You'll have like, all alerts and updates are coming into this Telegram just to tell you, hey, go to your classroom, one click trading, go into waterfall income, and the alert is right there. Okay. All right. Good stuff. See, Maria says if profits take 15 to 45 days, would it work on a small account? Totally. Yeah. Because again, my strategy one for waterfall income, does it work on a small account? Yes, because you can take trades with as little as like 60 cents of risk. So, I mean, do I care if it takes 30 days? Not really. Do I care if it takes 45 days? Not really. If my risk is $60 and I can make, 20, 30, $40 on that risk, I don't care if it takes 30. It's like I can take a small account of 4 grand, 5 grand, 10 grand and place plenty of trades. I can stack up, 4, 5, 6 trades in a row to let these things work out the way that they work out. So yeah, it's built for, any account size. I've taken as many as 50 contracts in some of these trades, and I've taken as little as one. So you can set that risk based on, your account size. But typically a waterfall income trade, and same with the daily profit, is all my trades are usually less than 1% risk. But I also trade like 20 to 30,000 trades a year. So I can, do I have risk in the markets? Of course. I trade tens of thousands of times. But at fractions of 1%, what it helps me do is I'm never all in on anything. So, my diversification is a lot of strategy diversification. I do like to trade the indexes. I like to trade the indexes because they are a fraction of the volatility of individual stocks. Everyone's all excited about what the V bottom was in stock and quantum computing and AI and I get it. Like everything blew up this year after the bottom in April, which was in a good way. However, if you're, watching Oracle, okay, and this is just individual stocks that are just coming to mind. If you're watching this thing go and you're super excited about Oracle that went up 190%, and you're stoked about that only to see it give back 45% of that. I don't want that type of volatility in my portfolio. So I just want individual trades that make me money, and I have ways to stay out of the market along the way, right? If you look at, Carvana, another crazy high flyer this year, which is up to fresh all-time highs. We had, this is Liberation Day. And by the way, this thing was like literally on the verge of bankruptcy. So it's like for anyone to say that Carvana, look, I traded Carvana. I traded Carvana right here with this head and shoulders pattern, and I got out around this choppy zone because I measured the move. It was over a triple digit winner. I was super happy, but I did not participate in all this wild and crazy. Look, I'm not going to say nonsense because it keeps going up and it keeps making investors money. Good for them. But not a lot of stocks can you say we're trading at $5 that are now worth $400. And that does happen in an individual stock. But for every one Carvana, there's hundreds that will never do anything else ever again. So for your 1,000% return here, you're losing 100% of your investment here. Right? So that's why trade size and commitment to this is really important. If every trade was $1,000, well, I better not have more than 10 trades because I would be giving all my money back. I can make all this money on Carvana, and then for all that, I have these other positions where I think it's going to do the same thing, and it never does, and I lose all of it here. Okay, here's a cautionary tale. This is a good friend of mine. I do trade for him because he made enough money over the last 7 or 8 years that he didn't know what to do with it, and he wasn't confident in his own abilities to keep making this money because he was a penny stock trader from about 2016, 17 to now, and he had from 2000, I'd say about 2016 to 2021. Okay. It's a friend. His name is Scott. He took about 150K and turned it into $7 million. Okay. Now, everyone hears that part of it and they're like, I want to talk to Scott. I want to learn how to trade penny stocks. I do too, right? When I first met Scott, we met on the basketball court. We played a lot of basketball together. We hung out. I mean, he was just a good guy. So, what he does, he trades, I trade. So we talked a lot of shop, like outside of our, weekend basketball stuff. Anyway, was I, curious of how he did it? Of course. Did I think that it was something I wanted to dabble with? Not at all. Why? Because he didn't know how to look at a chart. He was like scouring through like court cases and what stock is going to go public and what's going to become, a Nasdaq listed stock, and like all these things. I'm like, that's not really trading to me. This is like you're looking for stuff and hoping for a little investment that's pennies and pennies and pennies on the dollar that can go up thousands of percent, but there's no liquidity. You can't exit when you want to exit. And anyway, it was story after story of that trade was up over six figures and it went back and I took like 20 grand profit. That trade was up over $200,000. I took like 10 grand. It's like, it never sounded like he exited ever where he wanted to. Point is, I love this guy. I've known him for almost a decade now, but $7 million is now less than one. Okay. Now, how many of us would like to do that with our wealth? You have a lot of upside, and you had a way to do it, right? So we had a process, we had a system, and we made a lot of money. But over the last 4 years, you've watched most of that deteriorate to now having less than $1 million, and now questioning everything about the ability to do that strategy ever again. Like, his market may never work the same way ever again. And we've spent years talking about this because I have recommended that he diversifies into one, like trading bigger picture, trading indexes, way less volatility. He has enough capital to make a very good living for himself trading the markets, but not the way that he got it. Like, you made all this money. Congratulations. That's freaking great, man. But I don't trust a penny stock market with that type of capital. So if I can't scale this from 7 million to 70 million, it's impossible to think I'm going to do that. So I just think you go to more like traditional measures and methods. So anyway, I'm just, but now he has to learn something totally new, and that's been difficult. So anyway, um, for every one stock that did this, there's a lot that don't. And Scott is a living, breathing example, a good friend of mine that made a ton of money that makes anybody jealous. But for every one trade that he has that's made all this money, he has hundreds of trades that will probably never make him a single dollar. And I'm just not that trader. Like, I like the idea that even if, and here's, does everyone know Tom Lee from Funstrat? Tom Lee's like a perma bull. I just caught a session with him this last week. And, he's talking about a potential like 10, 20% window of corrections that the market might have, but ultimately trying to go to all-time highs. He says something crazy. If you bought the internet basket back in the late 90s, like literally you could have traded the top of the market with the internet basket of the top 5 or top 10 stocks, whatever it was, considered like the big .com internet basket. Even if you held it to today, 99% of those stocks of like the whole NASDAQ, like 90+% of those stocks don't exist today. A lot of stocks for the last 20 years have not survived. But you know what still trades today? The NASDAQ. You know what still trades today? The S&P 500. So I love that individual stocks can do this, and it's exciting, but I don't think I'll ever be a trader that wants to hold individual stocks for more than, maybe 3 to 5 year period. Okay. Or if I'm, holding, and it's like Mag 7 companies have changed the world. Do I think they're ever going to go out of business? I don't think so. But man, I think competition is so important to have companies that are going to try to dethrone Mag 7, that I think if anything in the next 5 or 10 years, we have a lot of disruption in the S&P 500. I'm not saying that Mag 7 is going out of business, but I'm saying that the moat that they have is going to be challenged, and it might make a lot of other things way more attractive with way better valuations and way more upside potential in individual stocks. But this also fuels what's best about the S&P 500, which is, what does the S&P 500 do? It takes the best companies in the world and lets them in, and it takes the crappy companies in the index and kicks them out. So it's trying to thin the herd, where it's like the best performing stocks are welcomed in, and what do they get? You get a seat at the table, and it's automatic flows from every passive investing strategy, every mutual fund, every 401k, forced buyers every single month, right? So until those flows stop happening, S&P is a good place to be. NASDAQ is that with a 20% kicker, 20% higher volatility up and down. But NASDAQ has been great. So anyway, all right. I'll cut the rant off today. I don't know. Any questions? Any last comments, questions? Class in 20 minutes on waterfall income. So Blake posted a link there. You can jump in if you want to. Just jump into the service, subscribe for the year, and we'll jump into class at 11:30. I might change one of the current trades we have that is pending. I might tweak that. We'll talk about that in class. Okay, I might shave that one down risk wise, or maybe change the structure a little bit. Okay, so class at 11:30. We'll be live tomorrow. To be determined on. I'll say to be determined on Wednesday, Thursday. Wednesday, the markets are open. I don't mind being live in the morning just to spot check things. I want to see where our bonus trades are going this week as well, since we are trading at 69.02. You know, what do I want to see price this week? If we opened here and we finish here for the week, we're going to have some profit. If we are, hitting this level or this level, we're going to have some profit. So we do have a profit trap. It's our broke wing butterfly profit trap. And down here, we have another broke wing butterfly profit trap. Not filled yet. So this one is pending, or this is at $1 to $1.20. This one's pending for $2. So I'm looking at kind of some defense on the week. Okay. If we don't have any questions for today, that was a fun little session. I didn't complain once about how bad I felt, because when we were live last week, I caught a little cold on Friday. It was like literally like Christmas Eve. I was like, man, I feel like crap. So I still like a stuffy head, but I feel totally fine. So it's just a weird head cold. So, all right. Waterfall income, see you in about 15 minutes. Everyone come back and join us tomorrow. Okay. Talk to y'all soon. Bye. I'll probably be live with Lance today as well. I think I'm going to be live with Lance at 1:30 p.m. for a little Stonkamania session. We have some stuff to talk about. So, all right. Thanks, Nessa. Thanks, Phil. Thanks, Maria. Thanks, Kent. Thanks, Blake. Peace out. See you soon. Bye.
All right, ladies and gentlemen, that is it for the daily profit plan. That's all we've got. Links in the chat for Waterfall. If you guys are interested in joining that, it's right here. But other than that, stay on your toes. See if we get some entries on these metal longs. Other than that, guys, that's it. We'll see you on the next one. Take care. Bye-bye.